Hello and welcome to BCR. Let's get your trading day started with the following financial news and market headlines.
Last week, the US dollar closed below the 106.00 level, aligning with a decline in US yields across various durations, despite temporary market sentiment leaning towards a potential Federal Reserve rate cut in September. However, it was a tough week for the dollar, with the dollar index touching a three-week low of 104.52 just before the weekend, significantly below the 105.00 support level. This was primarily due to the dovish tone of the FOMC meeting and weaker than expected U.S. non-farm payroll data for April. The soft NFP data released last Friday led to a sell-off in the dollar and increased the likelihood of a rate cut in September. Gold prices gave back all the gains they had made following the release of the U.S. NFP report on Friday. Initially, it came in below analysts' expectations. The precious metal rose to around $2,310, gaining more than 0.5%. However, bears took over and pushed gold prices down, at one point dropping to around $2,280, but fortunately, prices recovered by the close of trading and climbed back above $2,300. Following weak U.S. data, the benchmark 10-year U.S. Treasury yields were expected to remain below 4.6%, but improved risk sentiment did not provide upward traction for gold. As the likelihood of a rate cut this summer diminishes, gold investors need more clear guidance from the Fed. Last week, the US dollar fell, marking its largest single-week drop in 3 months, as investors weighed weak US employment data against the timing of potential interest rate cuts by the Federal Reserve. The Fed's decision last week to keep interest rates steady for the 6th time raised concerns among investors that persistently high interest rates could suppress economic growth in the US. Such interest rate scenarios typically exert pressure on the economy and could reduce oil demand. Additionally, easing geopolitical tensions in the Middle East and the prospect of a ceasefire between Israel and Hamas in Gaza led to narrow trading ranges for crude oil prices.
We hope you enjoyed today's market outlook. If you have any questions or topics you'd like us to cover, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news and